All right, let's dive into something pretty huge that's happening right where Wall Street meets the digital world. For years, there's been this multi-trillion-dollar question just hanging in the air. How do the biggest financial players on Earth actually get in on the blockchain game? Well, it looks like one technology is finally building the bridge to make that a reality. So let's set the stage. On one side, you've got the incredible, world-changing potential of blockchain. And on the other, you have this fortress, institutional finance, with its ironclad rules about risk and regulation. For the longest time, these two worlds were basically speaking different languages. They just couldn't connect. So you have to ask, what was the real holdup? Why have the institutions that literally move the global economy been watching from the sidelines? Well, the answer isn't really about the tech itself. It comes down to two things: trust and rules. And this comparison just breaks it down perfectly. You have traditional finance, which is all about regulated companies and intermediaries you're supposed to trust. It works, but man, it can be slow. Then you have DeFi, or decentralized finance, which is permissionless and moves at the speed of light, or at least the speed of code. But see, that's the friction point right there. That word, permissionless. For a bank, a world without rules is a world they just can't operate in. Okay, but this is where the story takes a really interesting turn. A new piece of the puzzle has shown up, a piece of infrastructure designed specifically to solve this exact problem by acting as the ultimate go-between. So here's the key thing to understand. Chainlink isn't trying to tear down the banking system, not at all. It's setting itself up to be the essential middleware. Think of it like a universal adapter, a secure bridge that lets banks connect to any blockchain, but, and this is the important part, on their own terms with their own compliance rules baked in from the very start. And listen, this isn't just some idea in a white paper. Chainlink's co-founder, Sergey Nazarov, he put it very plainly. He said they're building systems with controls so tight that even the most regulated organizations on the planet, like the Federal Reserve, could use them. I mean, talk about a massive statement of intent. So how in the world does this bridge actually work? Well, it all starts with creating a blueprint for something institutions can finally genuinely trust. It really boils down to these four foundational pillars. First, you've got data integrity, which just means the information can't be messed with. Second, interoperability, which is a fancy way of saying it can connect any blockchain to any other. Third, and this is the absolute game changer for banks, is compliance. And finally, privacy, to keep sensitive stuff safe. That compliance piece, it's not just an add-on, it's the core of the whole design. Right at the heart of Chainlink's system, what they call CCIP, there's a dedicated risk management network. The best way to think about it is like a built-in automated compliance officer that watches over every single transaction, validating it and making sure it follows all the rules that have been set up beforehand. And here's what that actually allows institutions to do in the real world. They can set spending limits, automatically screen for sanctioned addresses, create perfect audit trails in real time. Basically, it gives them all the controls they are already used to. And maybe most importantly, this whole setup is designed to align with the standards of the big regulators. The SEC in the US and Europe's big new crypto framework, MiCA. Okay, this all sounds great on paper, right? But is anyone actually using it? Let's take a look at some real-world examples, because this is definitely not just theory anymore. Now, this one is a really big deal. SWIFT is basically the backbone of global finance. It's the messaging network that connects thousands of banks all over the world. They are actively working with Chainlink to figure out how their massive network can plug into any blockchain out there. This isn't just a small project. This is about rethinking how global money moves in the age of digital assets. And here's another fantastic proof point. ANZ, a major international bank, used Chainlink CCIP to move their very own bank-issued stablecoin from one blockchain to another to settle a deal. This proves that big, regulated banks creating and moving tokenized assets isn't some far-off future idea. It's happening right now. It's operational. So we've seen how it works and who's using it. Now let's talk about the size of the prize. Just how big is the opportunity we're actually looking at here? Get this. According to a major report from Boston Consulting Group, the market for tokenized assets, that's turning real-world things like stocks, bonds, and real estate into digital tokens, is projected to hit over $10 trillion by 2030. That is the massive opportunity that this kind of compliant technology unlocks. And the demand from institutions, it is absolutely there. A staggering 80% of financial institutions say that interoperability, getting different blockchains to talk to each other, is critical for them. At the exact same time, you have 70% of the world's central banks actively looking into creating their own digital currencies. The entire global system is getting ready for this shift. So after going through all of that, what's the one big idea you should really walk away with? What's the key takeaway here? It's this. For years, everybody assumed that regulation was this giant wall stopping big money from getting into blockchain. But this whole approach completely flips that idea on its head. By building compliance directly into the technology, it actually becomes the very thing that gives these institutions the green light, the confidence they need to finally jump in. So regulation isn't the barrier, it's the catalyst. Which leaves us with this final, powerful thought. In the financial system we've known for centuries, trust is something you assume is there. You place it in a brand, in an institution. In this new world, trust isn't assumed anymore. It's proven. It's verified mathematically using cryptography. So the question is no longer if big finance will move to the blockchain, but what our world will look like when trust itself becomes programmable.